Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today's market analysis is for Friday, September the 3rd, 2010. Tell you what to expect next week. Check it out. Okay, let's start off looking at the Dow Jones Industrial Average 6-month chart, each candlestick being 1 day. A couple of points to note here. We are now trading at the 200-day moving average. You see it right here. Every time we've bounced above that, once we close below it, became a very bearish signal. Every time we've bounced above it, it's been a good short opportunity. Okay, so you can still travel upward for a couple of days, but you can't sustain this level, as that's another sign of a bear market, which is what we're in. And here we have every time she bounces above the 200-day moving average, she's a really easy short. So we're trading at the level now. MPT rating came in at 0.1, which is a weak support. So any move to the upside here would be weak and it's going to turn around and failing anyway. You've also got resistance at the upper Bollinger Band line. Keep an eye on that this week. Basically, any move to the upside here, I'd be shorting. You'll notice you're almost in line on the slow stocks. Keep an eye on that. When the slow stocks pulls up to the 80 line, that's when you want to be taking the shorts, okay? That's how we always do it. Nothing different here, okay? We're in an overall downtrend. We've talked about that repeatedly last week. This is just a counter trend bounce we're seeing here. We've seen these before. It's nothing new, okay? All very easy. They don't sustain. They can't sustain based on fundamentals and technicals, all right? Also, you'll notice you've had 4 consecutive days to the upside. Let's clear that up. 4 consecutive days to the upside for this chart. I believe 7 is the high end. 1, 2, 3, 4, 5, 6, 7 consecutive days on the upside. In the past 6 months is the most they've ever had in a row. You've had 4. So sometime next week, if they continue to move to the upside, they're going to peak out. You know that's coming. So like I said last week, I'll be looking for the short opportunities this coming week. Okay, markets in the U.S. are closed on Monday, but we'll be back to trading as normal on Tuesday. And that's when you can expect me to start looking for short opportunities, okay? So you can always go to our free website and check that out. Let's look at some more markets. Also, one more thing to note about the Dow Jones Industrial Average across the board. Note this advance here and then note the volume. Weak volume advances do not last. They are short-lived. And you'll see the volume falling off for the past couple of days. And also, you'll notice today's MPT rating shows no smart money activity on Friday, which means that they were not willing to hold into the weekend. They were just playing a little bounce. That's all they were doing, okay? Quick look here at the FTSE, the London Financial Times Index. You'll notice this 6-month chart, it's got 1, 2, 3, 4, 5, 6 consecutive days to the upside. 7's the high end for this chart. 1, 2, 3, 4, 5, 6. I'm sorry, 6 is the high end for this chart. 7 is for the Dow Jones. So on this 6-month chart, the most number of consecutive days, there's a 7 right there. I thought for 7. Okay, the high end is 7, and you've had 1, 2, 3, 4, 5, 6 consecutive days to the upside. You're at the upper Bollinger Band line of resistance, and you're finding yourself, the slow stocks is now up over the 80 line. It's time to short this guy. That's all there is to that, okay? I'm already short at this level, so I'm not going to add more here. There's no reason for me to do that. So keep an eye on it. This level here is short. Anything higher is a short, okay? You don't worry so much about timing the exact point of reversal and all that stuff. That doesn't really matter. What matters is that she's unsustainably overextended at this point. And again, you'll notice the 200-day moving average. You'll notice every time we hit that, that's an easy short, okay? And you're now above that easy line, above the 200 daily average, and you have the ability to short this guy, and she can still push a little bit higher, but the end result is going to be a fail and pull back down. Quick look here at the NASDAQ. This chart is looking very weak. You'll notice multiple gaps below. That's not the sign that you want to look for a quality advance higher. When you've got lots of exhaustion gaps like this, you know they're going to pull back down and fill. You've got one down here, you've got one here, you've got one here, and many going back as far as March 09. So there's a lot of exhaustion gaps in this thing. We know it's going to pull back and fill those. It's just a matter of time. So you can still push to the upside. You still have room here. That's a possibility. Don't expect that to, turn around immediately and go down and fill these. She can move up higher. But again, she's going to have resistance at the 200-day moving average and the upper Bollinger Band line, these two guys right here, and this previous high. You've got a lot of people in here that tried to play a counter trend bounce to the upside, which we warn against doing, and these guys got caught. The market just played around here for 3 weeks and then gapped down, leaving these guys holding the bag. So you've got a lot of guys that want to get out of this trade right here, okay? That's why we keep telling you, do not trade the counter trend bounce. It's not safe. Unless you do it just perfect, you can easily get caught that way. Play with the overall trend. The overall trend is your friend, and you want to work with that strength, not against it. So that's our thesis here, okay? I am looking at this opportunity for a short next week, so you can go check out our free website to learn more about that. And our live trading course will teach you how to read the charts and show you which opportunities I am taking for next week, okay? Let's look at some more chart. Quick look here at the Russell 2000 Small Cap Index. You've got gaps below, gaps above. It's not a matter of whether or not these will fill. We know they will. We also know the trend is down. We also know that we're getting to the overextended position here on the slow stotch. Come Monday morning, she'll probably be there. So all this, including the trading at the 200-day moving average, which we know is unsustainable, tells us that bulls cannot win this fight here. Bears can if they play it right. Okay, it's always a matter of the odds, stacking them in your favor, working with the strength, not against it. So what I mean by that, simply say yes, you can bounce up here and fight for a couple of days to the upside, but the end result is going to be a rollover and you're going to sell off and fail. I know bears are going to come racing back in and drive this thing lower. You hope bulls will push it a little bit higher. There's a difference between the psychology and the facts behind the markets. One is potential for a move to the upside, and another is a guaranteed move to the downside. Obviously, you want to be on the smart money, the good call, the safe call, and that's the guaranteed move lower. So we'd be looking for that, but all in all, right now you want to be looking for short opportunities. I also want to point out you've had 4 consecutive days to the upside. 1, 2, 3, 4. For this particular chart, 6-month view, if you go back and look, it's never had more than 6. You've had 1, 2, 3, 4, 5. In this move to the upside, you had 5. Back here, you had 6. 1, 2, 3, 4, 5, and 6. All right, you've had 4, so you could have 2 more days to the upside. But at that point, you'd know, look, that for this entire chart, it's never had more than 6 in a row for the past 6 months. So if you had 7, it can do it, but it's absolutely unsustainable. You've got a pullback coming. All right, again, lots of gaps below to fill, and a bearish divergence between here, and as long as that low of 587.67 has not been taken out, it remains in effect. You want to use every bounce as a short opportunity. This is another opportunity to find a short, okay? Pretty cool, pretty simple. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, we'd appreciate it if you'd subscribe to our YouTube channel. That helps us stay free, and we appreciate that, okay? Thank you very much for that support. Also, starting next Tuesday, next week, we begin our September trading course. If you want to go there and learn about that, check that out. You definitely want to do that because we show you what I am trading as well as why. We'll always teach you how to spot what I see. All right, it's very important information there for anybody who's serious about trading. If you don't know this stuff, you definitely want to know. All right. Also, quick look at our disclaimer. The disclaimer, read it and weep. God bless. Take care. I'll see you all on Tuesday. Continue enjoying your weekend.